evening and welcome to Money Magazine. I'm Alan Booknia. Most forecasters are expecting the U.S. economy to improve this year. That means the appetite for U.S. financial products will grow in Hong Kong. And brokers are stepping up their promotional efforts. But as producer Alice Can finds, there are important things investors should know before putting their dollars into these products.
U.S. discount brokers and major banks are aggressively promoting U.S. financial products, trying to lure Hong Kong retail investors with attractive commission fees.
The advantage of investing in U.S. is that their commission rate is much lower.
William Lowe started investing in U.S. stocks online 5 years ago when he was still in university.
Investors prefer buying some international company in U.S. For example, Tiffany's is one of the most luxury jewelry in the world, but Tiffany only listed in U.S.
E-Trade, an online brokerage listed in the U.S., set up an office in Hong Kong in 1999 targeting retail investors. In its promotions, it offers commission rebates, cash rebates, and shopping vouchers.
The market is getting competitive. Lots of other financial institutions also interested in offering the U.S. trading. People are looking into their portfolio diversification.
James Sun is with U.S. discount broker Charles Schwab.
You see a continuous trend for people to pay more attention to U.S. equity market and U.S. stocks. Online trading, you can easily trade, buy and sell a particular U.S. stock at the comfort of your Hong Kong home with a few clicks and for as little as $10 in commission.
But for Hong Kong investors, U.S. financial products can bring unexpected pitfalls. Roger Ho and his wife Phyllis started investing in U.S. stocks in the 1990s through Merrill Lynch and E-Trade.
One of the selling points was they could access certainly the whole of the U.S. market, worldwide basically.
But a nightmare began for Roger after the death of his wife in June 2007. He started a probate process to validate his wife's will in August.
She had U.S. company stock like AIG, Symantec, and also U.S. funds.
He hired a lawyer to sort out Phyllis's estate, including her U.S. stocks.
My solicitor wrote to Merrill Lynch on the 20th of August, 2007. They replied, setting out 6 documents that I would require to show them before they could release all the stocks and funds that my wife had at Merrill Lynch. There was a document called the U.S. Federal Transfer Certificate. I didn't take much notice of that.
It was the same story with E-Trade. Usually a deceased assets are frozen until the probate is granted. That was done in Hong Kong in December 2007, 6 months after his wife's death. Roger went back to Merrill Lynch and E-Trade with the probate letter, but they still couldn't release Phyllis's assets.
I was really shocked to find that transfer certificates that they mentioned meant a tax clearance certificate. My wife's estate had to pay U.S. estate duty. Although she was not a U.S. citizen, she was not a green card holder, she's a Hong Kong citizen. So I thought, wow, no, what to do? Well, I haven't heard about it before. We are non-U.S. citizens. We do not under the government of U.S. law.
A lot of people do not know this. If a person who is not residing in the U.S. and not a U.S. citizen, but they own in their individual name assets in the U.S., then when they pass away, they could be exposed to U.S. estate tax.
In addition to the real property located in the U.S., they also include financial securities instruments listed in one of the U.S. stock exchange, U.S. mutual funds, and also bonds issued by the U.S. federal and state governments.
The estate tax is based on the value of the assets at the time of death. For non-U.S. residents, there's a $60,000 exemption. After that, the tax rate ranges from 18% to 35%. Under U.S. law, the surviving family has to file a tax return with U.S. tax authorities within 9 months after the death, or face a heavy penalty of up to 50% of the tax owed.
2008, in March, that would be the deadline. But by the time I managed to engage a U.S. tax lawyer in New York, that was in February, very close to the deadline. And certainly, it would take quite a lot of time to ascertain the value of the securities.
Roger's lawyer estimated the duty would be about $100,000 of the almost $360,000 Phyllis's estate was expected to be worth. But the clock was ticking.
Oh, it's a lot of hassle and stress. We were so near the deadline. The assets were frozen. You couldn't sell the assets in order to pay the tax. I had to find the money from somewhere else, like selling other things, from savings, selling other stock.
He made it just in time.
We sent a check for over $100,000 as tax. I thought they will all be distributed to my children and so on. It's got to go to the U.S. Treasury.
But that wasn't the end of it, because although he paid the amount of tax his lawyer estimated it would be, he still hadn't finished filing the actual tax return.
So what the U.S. tax lawyer did for me was to apply for an extension.
The U.S. Internal Revenue Service finally cleared the payment of the assets to Roger in December 2009, 1.5 years after his wife's death. Roger feels Merrill Lynch and E-Trade should have informed he and his wife about the estate tax before selling them the products.
They didn't mention anything about the estate tax at all. If they had mentioned it, I wouldn't have opened the account. As simple as that.
Roger says it shows that just because you're dealing with a large, well-known financial institution, it doesn't mean it's trustworthy.
You feel secure. And you think that with a big brand behind it, they would be at least honest. And if there are any risks, they would tell you. But it's just that they didn't mention all the risks. The feeling was the unfairness, confusion, really a bit of anger.
Roger sold his entire U.S. portfolio afterwards.
Why should it be that when I die, a third of my wealth should go to the U.S. Treasury?
Roger confronted a Merrill Lynch account executive about what happened.
即係我哋non-U.S. citizen, non-green card holder 咧，即係我哋開 account 嗰陣咧，同埋之後真係冇人同我哋提過 estate tax 呢樣嘢。
有呢個 process 先至會去維議到。我而家同啲其他啲 sales 傾開偈，我都有會提佢哋美國嗰邊嘅稅項。
An invitation to Merrill Lynch for an interview was declined. We did ask Helen Chan of E-Trade about Roger's case.
Why didn't you tell them they might have to subject to U.S. estate duty? I don't have the full knowledge as to estate duty in the United States, and usually we would advise the clients to consult their tax consultant on all the tax matters. E-Trade, our model is providing online trading platform to self-directed customers, and so we do not provide any advice. I haven't heard of any complaint pertaining to that matter.
She appeared to get agitated and switched to Cantonese.
好難會 comment 到點解 invest online directly 會有 estate duty。如果佢係 U.S. citizen 嘅話咧，咁 U.S. citizen 佢 non-U.S. citizen， 咁我唔 sure 點解。
We asked James Sung about the estate tax.
It's fairly complicated. I'm not expert of it, so I'm not sure I want to talk about this in this particular interview.
Would Charles will inform the clients?
We definitely make sure that we do whatever we can to help clients with the reporting and the tax-related documents. Can we? I'd like to, if you can stop the camera. Honestly speaking, I actually also need to catch another meeting, so I can't really stick to this issue for too long.
You and
nice
look forward to work with you guys going forward.
Okay, thank you.
Legislator James To thinks it should be incumbent on the financial institutions selling these products to inform clients of the possible taxes they face.
Those OH or retiree or you considering financial planning or estate duty planning. Well, not everyone can engage in really professional expert advising on such implication.
To thinks the government should tighten laws regulating brokers of U.S. financial products.
I believe more and more people would invest directly, and that's the trend. I would ask the UFC to do at least the following. One is to step up the investor education about these implications of estate duty of Hong Kong people holding U.S. stocks. And it should be compulsory to disclose and alert the investor.
Tax experts say Roger Ho's case is not unusual.
We have seen cases that the families a lot realize that owning the U.S. assets, they only find out when the individual pass away, and then they found that they have a very substantial amount of the estate tax bill need to be settled in a very short period of time.
Anthony Tong says there are ways to own U.S. assets and still get around the estate tax.
The trick is you don't want an individual holding the U.S. assets directly in their own name. So the solution could be they can form a company, a Hong Kong company, to make the investment. And in that situation, the individual would not have U.S. asset under their name.
When we come back, we'll look at various ways to cash in on the renminbi. Please stay with us.